Hello, everybody, and welcome to Ayming's webinar this afternoon on R&D reform, what HMRC's new consultation means for you. We'll be handing over to our three panelists in a minute. We've got Mark Smith, who is our partner for innovation for Ayming in the UK. We have NG Rios, who's director for the tax incentives practice, and Ben Craig, who's a senior manager. We're going to keep everybody on mute whilst we go through the presentation, and we'll take questions at the end. You can put your questions into the chat function, and we'll come to those at the end. I know that we've got quite a lot of content to get through because we're going into a fair amount of detail about the questions from HMRC. So yeah, please send your questions as we go through. And just one other thing, we will be sending out a survey to all attendees following on from this webinar, as we'd like to get a bit more detailed feedback from you. So really, this session is to go through the HMRC questions for Ayming, to give our view on what those mean for everybody, and then we'll be asking for feedback in the survey. Anyway, without further ado, Mark, I shall hand over to you.
Thank you, Nick. Welcome, everybody. Delighted to have you all here on our second webinar on the latest R&D consultation from HM Treasury and HM Revenue and Customs. This is a really exciting time for R&D in the UK. Innovation is clearly at the heart of the government's strategy to boost productivity and economic growth. The government has set an ambitious target to raise total investment in R&D to 2.4% of GDP by 2027. And they recognise that R&D reliefs have a key role in incentivising this investment. Therefore, this consultation has been launched to ensure that the reliefs remain up to date, competitive and well targeted. And it's high time too that the reliefs were looked at in this way. We had a consultation on cloud computing and data costs last year, when these technologies have been around for years already, and we still don't have the changes needed to claim for these costs. The SME scheme was launched in 2000, and science, technology and the world of R&D have moved on tremendously since then. If I think back to what I was doing in 2000, I was studying at university, saving my work to a 1.4 megabyte floppy disk, texting my friends on my Nokia 3310, and using a dial-up modem at home with a top speed of 28.8K. The world has moved on a lot since then, and it's important that the R&D schemes reflect the world as it is now and adapt to ongoing changes promptly. So what are we going to cover today then? Together with my colleagues Angie and Ben, we're going to take you through the consultation and give you our views. However, as Nick mentioned, this is just the first step. What you'll see as we take you through the consultation is that the views of businesses claiming R&D reliefs are vital to shaping policy going forward. Nick, FYI, you want to turn your Teams notifications off. So we'll be following up with a survey to each of you to gather your thoughts. We're happy to put your views anonymously to HMRC under the Ayming banner, and we'd really love it if people were willing to put their name to their comments, because this definitely carries more weight. And we're also able to help with drafting specific representations if anybody wanted to make them individually. Furthermore, if after the survey anyone would like to share additional views or they've got any other questions for us, please do reach out to your usual Ayming contact or to any of us presenting today. As you'll see on the agenda on screen, we've split the consultation up into three themes that we'll be taking you through today. First of all, the overall impact of the schemes and R&D. Second, the administration and processing of claims. And thirdly, the specifics of R&D activities and costs. For the first section, I will be handing over to Angie in just a sec, who together with me will be taking us through the first of these three themes. Over to you then, Angie.
Thanks, Mark. Nick, can you move on to the next slide? So I'll be going over the overall impact of the schemes and the R&D and going through some questions with Mark. Into the next slide, please. So the first question we'll be looking at is, do you consider your company to be a research-intensive firm? How does your business benefit from the R&D reliefs, e.g. cash flow, reduced tax liability? If your company is an SME that claims under both the SME tax relief and RDEC, what is your experience of using each scheme and how do they compare? Second question, is there a case for consolidating the two schemes into one? What do you value about the design of the current scheme that might be lost if they were unified? What do you think explains the difference in additionality between the two schemes? How could the schemes be improved to incentivize the R&D your business does or might consider doing? Can you give evidence to support your suggestions? To what extent do the rates of relief available to you impact your investment decisions and or your choice of location? Is the balance of relief between the two schemes appropriate? Is there any evidence of significant dead weight where investment decisions would proceed without relief? Would a departure from the ordinary corporation tax self-assessment system be justified? Should more information and assurance be required from companies at point of claiming? Should a company providing more information upfront be treated differently? So, Mark, on those questions, the first question clearly is one that you will need input from our clients. However, from your experience, do you have any examples that you could share on how R&D schemes have benefited your clients?
Yeah, sure. I mean, I see the impact and the benefit of the R&D schemes all the time. But I picked two examples to share with the audience today. And these two are sort of the usual ones at the forefront of my mind when I think about the two schemes. So I picked one for SME and one for RDEC. One SME where I sort of think about the impact, and it really did have a big impact for this company, was a pre-revenue technology startup I used to work with, and they were investing heavily in R&D for smart TVs. I was helping them claim around about 80% of the salary costs for about 50 staff, and this meant for them a 7-figure tax credit, which met about 30% of the annual running costs for the business. So it's really huge for them. It allowed them to space out their use of external equity funding and allowed the founders to keep a greater percentage share of the business, which was important for them. And importantly as well, it gave the business a much greater chance of success. What was really critical here was HMRC paying out quickly and predictably. And we know that that's not always been the case recently. In fact, I think for the second year for that client, we put their claims in about 6 weeks from their year end, and HMRC paid within 4 days. So, you know, getting the money less than 2 months from the end of their year, I think, you know, really did have a significant impact on that business. If I think about RDEC, a trend that I've seen recently, and one that I've actually been actively promoting myself because I think it's a great idea, is rather than booking the RDEC to the projects or business units and thereby cutting the costs of ongoing R&D, what some businesses are doing is booking a proportion of the RDEC credit and setting that aside into an internal grant funding pool. You know, then aligning that with the overall innovation strategy of the business allows the funding of internal projects, some of which might not have got funding otherwise. So it's helping already innovative businesses do even more. And, you know, clearly this has a direct link to the additionality that the government's looking for as well.
That's a really good example. Oh, sorry.
What I was going to say is just, you know, those are two examples from my experience, but for this question in particular, we're really looking for examples from the audience. We're looking to hear from you. What impact does the R&D schemes have on your business? The more positive stories we can share, I think the better.
I agree. And that's a really good example, and I've had some clients as well that have, when discussing, have mentioned that they've been able to take on more risky projects than they would have in the past without having had relief. So I think it's a really good example, kind of the additionality you do get out of the relief. RDEC for all is mentioned in the conduct. What's your view on making this change?
Yeah, for me personally, I think this would be a welcome simplification. Specifically, there's a couple of things that this change would bring about. For RDEC, the rate of benefit is the same regardless of whether you're a loss-making or a profit-making company. There's no such thing in RDEC as the valley of death, which some SMEs face, where they miss out on relief. You know, a well-designed scheme should be giving cash to innovative and growing businesses, whereas currently some SMEs miss out where they're using brought forward losses. And as well as that, the above the line accounting for RDEC, accounting for it in operating profit, is highly valued by business. Having this option available to SMEs as well would be hugely beneficial. And this point in particular is something that I'm asked about all the time.
And in many countries, there's no differentiation between SME and large companies. So it will be interesting to obviously see if that was the direction HMRC is looking to go. But what do you think we would lose if the schemes were consolidated?
Well, I think if you did the design of it well, I don't think you'd really lose too much, provided you maintain some of the important features of the SME scheme. I think the benefit rate for SMEs would definitely need to be maintained to show that there's enough money provided to those companies that need it most. Sticking with the generous SME definition as well is a must. It's double the standard definition of an SME, and this is hugely beneficial also. As well as that, the subcontracting rules should be maintained for SMEs to ensure businesses who don't always have the option to have the resource in-house are still able to benefit when they're contracting out R&D.
I know you already touched on the fact that it will be really helpful for us to get input from clients on this. But from these three questions, where would you feel the client input would be most beneficial?
Yeah, I think for the additionality point for SMEs, I see the huge impact that the generous SME scheme has on businesses, and I wouldn't want to see this level of benefit eroded. SMEs are where the sort of future stars, the future tech unicorns are going to come from, and it's vital that the government gives them the support needed to invest heavily in developing the next generation of world-leading technology. However, there's clearly a view that comes across in the consultation that the SME scheme is potentially too generous. They mentioned dead weight in the questions you just read out. So I want to see as many examples as possible from business that we can use to rebut this view.
Also seems from the direction of the questions, Treasury and HMRC seem to think the RDEC scheme has greater additionality. Why do you think this could be?
Well, I mentioned the above the line accounting before. I think that has a huge impact, as well as the fact that the net benefit of RDEC is now up to above 10%. RDEC now has a material impact on large business, and I see it regularly impacting board level decision making. You know, the level of stakeholders that we deal with now is regularly up to C-suite, whereas previously it was tax team or lower level finance teams. And when I first started doing R&D claims with the old 30% super deduction for large companies, so many of them just simply weren't interested. So I think the above the line accounting has really changed that. Additionally, reflecting on why the additionality for SMEs is falling, I think this could be in part due to the substantial delays in processing a payment of R&D claims recently. You know, where SMEs have been less able to rely on the funding, less able to predict when it might arrive, they're less able to factor that into their development plans. And so that just really has a negative effect on their ability to do more with it, to invest more in R&D.
Something else that was touched on in the questions was about the self-assessment scheme that's currently available in the UK. What do you see as the benefits of self-assessment-based approach?
Definitely a benefit. the UK is one of the top countries in the world for ease of application of their R&D schemes. And this is very attractive for international businesses. And I know companies are often put off by the more onerous rules in other countries. Occasionally, I've even seen companies decide not to claim in particular jurisdictions because of the complexity and the effort and the admin burden involved.
What do you see as the downsides?
Well, I think what is obvious from the tone of the questions is the fact that self-assessment is a system where you're not going to have perfect compliance because you're relying upon business to self-report. However, the balance between ease of application and having perfect compliance needs to be struck. You know, we clearly don't want to see overinflated or even fraudulent R&D claims. But if we were to replace CTSA with a more onerous system, that could diminish the incentive effect of the R&D claims. Additionally, under CTSA, the fact that we have tax inspectors examining R&D claims leads to a few problems. You know, they either focus on more trivial tax and costing matters because that's their comfort zone as tax inspectors, or they seek to challenge competent professionals, some of whom have, you know, PhDs and decades of experience in their field. You know, with a tax inspector that's not technical in nature or background, challenging them, challenging their R&D assessments with little or no experience or justification. You know, it is very difficult and companies get very frustrated by that. With that said, however, I do actually believe that a greater volume of more targeted R&D inquiries from HMRC under the current CTSA regime would achieve the aim of better compliance. CTSA simply doesn't work if companies have a negligible chance of inquiry. In fact, I often hear of so-called HMRC approval from people, when actually what they mean is simply HMRC have not reviewed or challenged the R&D claim. It has not been approved.
Something else that they suggest in the questions is pre-authorization of R&D claims, which is something that we know happens in other countries, or at least they're looking at to do a similar arrangement. Could this work in the UK?
Yeah, I think it could work, but it would have to be staffed appropriately. The recent substantial delays in processing of claims have had a hugely negative impact on companies, particularly SMEs. And this was largely an issue of staffing, a lack of staffing. If there were delays in receiving pre-authorization, or if pre-authorization pulled HMRC resource from regular processing of R&D claims, such a change could be hugely counterproductive. And any pre-authorization would also have to be meaningful. We regularly consult as part of our day-to-day, in advance of submitting claims, we consult with HMRC. Despite this being exactly what they're after, and it's in their guidance, we often don't get much value from this. Or it's a lack of willingness to agree a methodology or a technical point without seeing the financial impact first. So I think we would really have to make sure that the pre-authorization regime was well designed and well staffed and actually meaningful.
Thanks a lot for that, Mark. I will touch on some of the points that you've also raised on my compliance side of things, but I'm going to hand over now to Ben to ask me questions around the administration and processing of claims.
Thank you, Angie. Good afternoon, everybody. Yeah, so in the second section of the webinar, or the second section of the consultation rather, we've got 3 questions that HMRC is asking. Firstly, question 6. When did you first claim and what prompted you to do so? Do you use an agent? If so, why? What is your experience of how agents' fees are structured? How could the expertise and specialist knowledge of agents assisting with R&D claims be improved? Question 7. How can the responsibilities of HMRC, agents and the company be better reflected in the claims process? And then question 8. What other changes might help claims to be dealt with more smoothly while ensuring better compliance? Is there a way that HMRC and advisors can work more effectively to improve the quality of external advice available to companies? If you claim R&D tax reliefs in other countries, how does the claim process differ, and what are your views on this? Well, it sounds from those questions as if HMRC is a bit concerned about the role of agents and advisors in preparing claims. Why do we think that is, Angie? It makes sense to me that claimants should be getting professional advice and help make accurate claims and reduce the compliance burden on HMRC. That seems to be in everybody's interest. So what's the problem?
Yeah, it's interesting to see the line of directions HMRC is going with these, Ben. And it seems to fall in line with the consultation that they recently released in terms of how to improve the quality of the tax advice market. And it is definitely something that has been, I feel, has been needed for some time. Because you're right, there is a need for the use of specialist advisors, especially around R&D tax services, because the nature of how projects are assessed for R&D really lends itself to the use of specialist advisors who are able to speak the same technical language as the engineers and scientists in businesses. And this is an area that even with businesses that do have an in-house tax team have mentioned that this is really where they kind of get the value from using advisors. And it is something that is done in all jurisdictions around the world. It is not unique to the UK. And it is really it is consistent with other tax advice that is provided on other tax matters. And having spoken to a lot of clients, we really understand that there are businesses that will not be submitting R&D tax claims without the use of advisors. They don't have the resources or the time to be able to provide the level of work required to prepare an R&D claim. So limiting the input of advisors in providing this service could really impact companies' ability to put claims through. And that would go against the spirit of the regime, which would obviously go against what the government is looking to achieve in terms of increasing the support it provides to R&D in the UK. However, it does come across that HMRC's concerns is not necessarily around the provision of tax advice, R&D tax advice from advisors, but rather around the quality of the advice. And I can understand to a degree why that is. Currently, the barrier to entry in the industry is quite low, and anyone and any business can provide R&D tax services. And there has been a push in the industry for more regulation and guidance around this, which really kind of drove the publishing of PCRT guidance by ATT last June. So this is definitely an area we can welcome more input from HMRC. And based on the consultation, it does look like they're doing more around that. Another area that really is highlighted in the questions is HMRC's concerns around the contingency, no win, no fee basis that they talk about. They have concerns that the structure of the fee drives poor behavior from advisors, which pushes them to push the boundaries of what is eligible and including non-qualifying activities. And I can see maybe to some degree, right, they may have some concerns, and there are other countries that have restrictions around this. However, having spoken to our clients, we understand that for them, the risk-reward benefits from the contingency fee model works for them from a business perspective. It's much better for them than fixed fee and time and materials, and also works for the agents as well. So this is really an area that we would appreciate input from the audience to understand the reasons and rationales of using advisors, the benefits you gain from using advisors, and also the reasons behind a preference for contingency fees.
Yeah, there's certainly some interesting views there, and I agree with you. I think our experience has been that a lot of clients do like the contingent model, and therefore, why has HMRC got a problem with it? The other sort of aspect of those three questions, Angie, was talking about the HMRC side and how well they administer the claims. What do you think they could be doing better?
There's definitely a lot more that HMRC can do in terms of improved compliance around R&D claims, and Mark has touched on quite a few of those. I think one of the key areas is, although the ease of application in the UK is low, the level of scrutiny on claims is also much lower than other jurisdictions, which also drives to the poor quality that they're looking to remove from the advice. So more compliance around more review of claims would go a long way towards actually improving the quality of the claims being submitted. Another area is the engagements pre-submission. We tend to find, and other companies as well tend to find, that when you engage with HMRC to try and understand, the methodology or the claim that you're putting through, whether HMRC is always reticent to give confirmation on the claim, and they always kind of come back and say submit and we'll look at it later. That in itself also can drive to poor claims being submitted, especially for businesses that don't have a good understanding of what is required in an R&D claim. So more improved engagement from HMRC prior to submission would also be a good, would really help the process. And also another area as well that HMRC can be looking to improve is when they do get involved in reviews of claims. As Mark has rightly pointed out, you do have agents with no technical knowledge challenging the validity of claims with no technical justification as to why a project is not qualified. And it could be as simple as them just saying that I don't think there's any R&D in this. That is not sufficient enough, and there needs to be more done around this. Also, the length of time that they take in responding to claims. We can have periods where they can take 6 to 9 months. All of this can be demoralizing for businesses that are looking to put claims through. And we would really also value some input from the audience around your interactions with HMRC, and also understanding if there are any areas that you've identified where we can improve things, where HMRC can make improvements.
Yeah, I definitely agree that there's a disjoint between HMRC's perception of how well it implements the scheme and the experience of taxpayers on the ground in trying to make claims. So definitely room for improvement. Moving on then to the third section of the webinar, to do with some of the details of what counts as R&D and what costs you can claim. I'm going to hand back to Mark to discuss that and ask a couple of questions of me.
Okay, thanks, Ben. Well, this is the bigger section, so we've broken up into two smaller sections here. Starting off then with question 9. Is there evidence to suggest areas of activity other than those currently covered by the R&D definition drive positive externalities which should be recognised by the tax system? Question 10, do you think the R&D tax reliefs could better incentivise R&D with specific social value? For example, developing green technology. Could R&D tax reliefs be used to disincentivise R&D in certain fields? And question 11, what is your experience of conducting R&D in different regions across the UK? How do R&D tax reliefs benefit these activities? And how could the offer be improved to better support these activities? And question 12, are there any other areas of qualifying expenditure that should be included within the reliefs? And how would this influence your investment decisions? So Ben, looking first of all at these questions before we move on, there's a couple of questions there about adjusting the R&D definition. What sort of changes do you think might be on the agenda?
Well, I think the first point I'd like to make is that the Bayes definition of R&D, which we use in the UK, is a narrower definition than that used internationally and that's published in the Frascati manual. Some areas, particularly to do with mathematics, humanities and the social sciences, are not included in our definition They are included internationally, and I think they should be included in ours as well. There's a benefit to aligning more closely with the international definition. It gives a degree of consistency around the world, which should be encouraged. But I think on a more practical level, the Bayes definition in the UK makes the boundary of R&D more difficult to determine in a lot of situations, and hence it's more challenging to get an accurate claim. For example, consider algorithm development. In itself, that's mathematics, it's not R&D. But if it's part of a software project to implement that algorithm, it can be brought in as a qualifying activity. Or similarly, if you're designing a stadium, you have to do some crowd modeling and crowd studies. That would be a social sciences and hence excluded. Because it's influencing the engineering of the stadium, it's suddenly brought in. If we moved to a more Frascati-based definition than we currently do, we'd clear up some of those grey areas. The other idea that's in there, which I think is quite interesting, is the concept of splitting out different types of R&D and giving different reliefs. I think that's a very interesting idea on paper, but it would be very, very hard to implement in practice. A lot of R&D has benefits and effects across a huge range of different areas and fields and industries. And we might end up creating the situation where a claimant is trying very hard to create a very, very tenuous link to a good area of R&D just to be able to maximize their benefits. Conversely, it might create the opposite situation. It's so onerous and so challenging to create the connections to those areas that nobody does it. And valuable R&D is going unrecognized and unincentivized and unrewarded simply because it's too difficult to claim. I'd also point out there's only one country around the world which has attempted anything like this, Italy. They have recently, only in 2020, introduced 3 different categories which they've defined very, very broadly. It's a new scheme, as I say, only came in last year. We don't yet know how effective it's going to be or how easy it's going to be to implement. So I'll be watching that very carefully. I think this is going to be very challenging in practice.
Yeah, I completely agree. It's an interesting idea, but trying to define clear boundaries between complex fields of science or technology, particularly when a lot of R&D is multidisciplinary, I think is going to be pretty challenging. What about the question with regards to regions then, Ben? HMRC stats show R&D is particularly prevalent in companies with registered offices in London and the South East. Is that reflective of where R&D actually happens?
No, it isn't, to be quite honest. And HMRC's own publications acknowledge that the registered office is not a good way of determining where R&D actually takes place. We know of lots and lots of companies which are registered in London, but which have operational premises elsewhere or are nationwide businesses. For example, only last week I was talking to the Scottish divisions of a nationwide company registered in Surrey. Those Scottish divisions spend millions of pounds on R&D annually, but it's all treated as being in the southeast for purposes of those statistics. I think that indicates the essential difficulty with trying to regionalise these R&D schemes. How do you tell where R&D is actually taking place? R&D is not a tangible thing, unlike some of the other regionalised incentives that form part of the government's levelling up agenda. Free ports are easy to define. You can draw a line on a map and say, inside that, that's our free port. You can't do that with R&D because where it's happening is not as easy to define. I'd also point out that in a post-COVID world, the physical location of the person doing R&D is increasingly irrelevant. Loads of people are doing R&D from home, and they could be doing that anywhere. All of that being said, I feel very strongly that if something like the Northern Powerhouse and the Midlands Engine programmes are to succeed, there will be a need for companies, and particularly industries and manufacturers in those regions, to invest in R&D and to be innovative. So if we can find a way to practically implement some regionalisation, I think that should be encouraged.
Yeah, I mean, having lived in the Northwest for 14 years, you know, I'm all in favour of the levelling up agenda. But again, it seems like quite a challenging one to address. Turning now to the question on qualifying expenditure, Ben. This is really asking what expenditures are excluded from making claims at the moment that possibly should be in. What's your thoughts on this?
Well, it is, and there are two main areas that I think are currently excluded that we should brought in. They're both types of costs which I encounter a lot with clients, often have to have conversations where I'm giving them the bad news that they've spent a huge amount of money on something that is R&D, but it doesn't fall into the qualifying categories, and therefore it can't be a part of their claim. The first example of those, which I think we've touched on already, is around cloud computing and data costs. There was a fairly extensive consultation on that in the second half of last year. Initially, that seemed very, very positive, and the majority of respondents said that they felt that such costs should be included where they're necessary for R&D. Certainly, that was our view. The problem is we have yet to see any sort of proposal from the government in terms of changing the legislation to include them. It seems to me a very, very easy win. It's already on the agenda. All that needs to happen is to implement that change. So what's the delay? The second area that I want to consider is around plant hire, equipment rental, and or the depreciation of such costs. Again, I've lost count of the number of clients who have had to say you can't include your plant hire where it's relevant to your R&D. And it doesn't make sense to me that a company is not able to make any claim at all if it hires plant, but if it had purchased the equipment, it would be able to make a claim for R&D allowances. That's just nonsensical in my book. All of that said, RDAs themselves are up for review, and that will lead into the next couple of questions in the consultation.
Yeah. Completely agree. I think there was pretty broad consensus on the cloud computing, and that's probably not going to come in as a cost category for a couple of years now. I just don't see the reason for the delay. Okay, looking at the final set of questions then. Question 13, following on from your comments on RDAs there, Ben. What proportion of your R&D expenditure is treated as capital for the purposes of corporation tax? What would be the impact on your R&D activities if of increased relief for capital expenditure? Question 14, do you currently claim RDAs? If not, why not? What do you like and or dislike about RDAs? Question 15, how much of the activity in respect of which you claim R&D is in the UK? Sorry, R&D in the UK is undertaken outside of the company, and how much of that is not undertaken in the UK? What are the benefits and drawbacks of subcontracting, whether overseas or domestically? What are your other commercial or other reasons for carrying out work overseas rather than in the UK? Question 16, how could the government distinguish between work that needs to be taken place abroad and which benefits the UK and that which doesn't? And the final question, question 17, how can we identify the supporting activities which are most valuable for R&D while providing a clear boundary to assist companies in claiming and HMRC in administering? Okay. The all around capital and RDAs. We don't see an awful lot of RDA claims ourselves, Ben. Why do you think that is?
Well, you're right, we don't. And I think there's a lot of possible reasons. I'm very, very keen to hear some of the views of our audience on that one as to why they don't make RDA claims. My own view is that the problem is that the RDA scheme is a bit dysfunctional. It's an old piece of legislation. It hasn't really kept pace with other changes in the tax landscape over the last 25 years, and nor has it kept pace with how companies are accounting for their development costs. For example, there's loads of other capital allowances which are more generous and which are easier to claim. which means that there's a large amount of capital R&D expenditure going through those allowances rather than through RDA. That particular example there is the new 130% super deduction that the Chancellor introduced in the budget last month. If you can claim a 130% super deduction, why on earth would you jump through a load of extra hoops to be able to claim RDA, which only gives you a 100% deduction? The short answer is you won't. You'll claim 130%.
So, with that said, Ben, what would you suggest they change?
Well, I think the simplest answer, although possibly the more controversial one, would simply be abolish the capital revenue divide entirely for R&D claims. In other words, allow a company to include expenditure in its RDEC or its R&D tax relief claims, even if it is capital in nature. The capital revenue divide is one of the most complex and controversial areas of the R&D schemes. It's a challenge that we deal with on a regular basis, and quite regularly we find that companies that lose out on claims for highly tax technical reasons, and I think that's unfair. If you abolish that distinction, it would lead to a much simpler process, and it has precedent in some of the other schemes overseas which don't make that distinction.
Yeah, I completely agree, Ben. It's something I've been in favour of for a very long time. I think being limited on claiming, particularly in respect of staff costs and contractor costs, just doesn't make any sense to me. But you mentioned it probably would be quite a radical change, Ben. Are there any other ideas?
Yeah, there are two options I think that ought to be considered. Firstly, allowing loss-making companies to claim a payable cash credit if they're making RDA claims. That would mean that companies in that position get an immediate cash benefit, which is far more favourable to a loss-making company, which currently doesn't actually get a cash benefit from making an RDA claim at all. The second option I'd like to throw out there would be to change RDA to being a super deduction in the manner of the new scheme that's just been introduced. That sort of thing has never been considered in relation to capital allowances before, but the new scheme creates a precedent. So let's build on it. Let's allow RDAs to have a bigger super deduction and an ongoing super deduction beyond the time-limited 2-year scheme that's currently out there. That will be better than the RDAs. It gives a tangible long-term benefit rather than simply the timing-based benefit of the current regime.
Okay, moving on to questions 15 and 16. They're focusing on contracting out of the company and the ability to claim for those costs. And this seems to be a topic that comes up quite a lot. Could you explain to the audience what the concern is here, Ben?
It does crop up quite a lot. The fundamental problem is HMRC and the Treasury are concerned about whether R&D tax relief is actually being used to support the UK economy, as is the intention, or whether the funds are simply being used to support work that's happening, hence contributing to the economy of another jurisdiction overseas. It seems pretty clear to me that the intent is that they want to introduce a restriction based on territoriality.
Okay, I mean, any restriction on the relief seems like a bad thing to me. Are there any particular objections that you would have in this instance?
Yeah, there are many. Firstly, I think it's important to say subcontracting in general is an essential part of R&D projects. It allows a company to bring in specific expertise that it may not have in-house, and it facilitates scaling up of projects to address the needs of a particular project and activity that they're working on. That's very important. Limiting that further than is already the case for subcontracting would be counterproductive, and it would punish companies unnecessarily for making commercial decisions to outsource their R&D rather than keeping it in-house. Looking specifically at the international question, I think it's very clear, and we've got a lot of examples of multinationals that run their R&D projects and base their IP in the UK specifically because the UK is a good place to do that. That has economic value. even if the R&D is actually taking place overseas, because of the increased investment in the UK and the increased revenue that a UK company will derive from owning that IP. In the world post-Brexit, it's particularly important to make sure that the UK is seen internationally as a good place to do business and a good place to invest in innovation.
Yeah, I mean, even before that, I think there was a strategy to make the UK a good place to have a headquarters or a regional HQ, and that lack of territorial restriction was certainly helpful for that. So, yeah, I think it's important HMRC and HM Treasury don't really lose sight of that benefit. Could you just explain and expand a little bit further, Ben, on why companies contract internationally at the moment?
I can, though it is, again, a question I'd like to hear the views of the audience on. My own view is that the main reason is one of economy, particularly within the IT and tech space. It's pretty obvious that you can get quality talent and quality personnel abroad for far less money than if you're paying London wages. What that means is that if overseas subcontracting were to be limited, it would be unlikely to mean that you'd onshore R&D. And if it did, it would mean a reduction in the amount of R&D being done, simply because the money would go less far. What I think is more likely is that companies will actually reconsider their decisions to base their innovation and their R&D in the UK. They'll simply run all of the project overseas in those countries where it's cheaper to hire the people to do it. And I don't think that's a positive thing. That certainly wouldn't support the goals of the R&D incentives. I'm also going to point out that the lack of the territorial restriction is one of the most appealing features of the UK R&D regime, and it makes it stand out internationally. Most of our equivalent schemes abroad have some form of territorial restriction, and we know of a number of big multinationals that are drawn to the UK specifically because we don't have one. The final point I'm going to mention, which I brought up before when we were talking about regionalising within the UK, in a COVID world, the physical location of the person doing the R&D is increasingly irrelevant, and it's quite hard to assess. So my conclusion is, I don't think the government should introduce any sort of territorial restriction. It will be complicated and it will be counterproductive.
Yeah, completely agree with that one, Ben. Okay, so turning now to the final question on indirect activities. This, again, is a topic that comes up very often. It was mentioned in the two previous consultations last year, and here we are again. What's the concern here?
Well, we know HMRC has never liked indirect activities. It's something that seems to have been queried in every inquiry I've ever dealt with over my career. I can sort of see the point. We're talking about work that isn't directly contributing to the R&D, so there is a legitimate question, should it be eligible at all? My view is, yes, it should. Qualifying indirect activities, which are on the prescriptive list of what qualifies, are necessary for the R&D to take place. If you took them out, all that would achieve would be to limit the relief and limit the funds available for investment in direct R&D.
Okay, I mean, there's a question about what's more valuable. Are there QIAs that you think are more valuable than others?
It depends a little bit on your point of view, though I feel we come close to coming back to the question of comparing the value of different types of R&D, which I covered earlier. I would say that my view is we know different R&D projects incur different amounts of qualifying indirect costs. For example, the pharma industry, there's a lot of security costs because the nature of the work means that their labs have to have intensive security, far more than, say, a small manufacturing company. Now, I don't feel that the pharma company should lose out and have those costs excluded from its claim. They're an essential part of making sure that the R&D can take place. So they should be in. Likewise, that small manufacturer should be able to claim for its much smaller security costs because it's necessary for its R&D to happen as well. The final point I'm going to make, and it brings me full circle to what I mentioned at the top of this section, QIA's indirect activities are recognised as R&D in the Frascati manual that's used as the international definition, and they can be claimed in most other jurisdictions worldwide. So I feel we should keep them in the UK scheme. There's no reason to take them out and create an anomaly unnecessarily.
Yeah, I think you can't do R&D in a vacuum, and I think those indirect activities are definitely needed. Ben, thanks for that. So there we are. We've covered the main section of content. 55 minutes it's taken us. I think we maybe just have time for one question if we've had anything come through. Nick, have we got anybody posting questions in the chat?
Nothing has come through for the so far.
I appreciate there's quite a lot of detail for people to digest, so perhaps it's one for questions at a later date. In wrapping up then, thank you Ben and Angie for joining me today and presenting. Thanks to everybody who attended. We hope that you found the session useful. Our intention with this webinar and the one we ran on Monday was to inform and educate you about the content of the consultation, to spark some of your thoughts about your responses by giving you some of our thoughts, and hopefully we've achieved that today. So what's next? The consultation is open for everyone to write their own response. There's a deadline of beginning of June, so we have about a month and a half left to respond. We'd be happy to help anybody with their own responses. As I'm sure everybody would expect, we'll be preparing a comprehensive response ourselves. And as noted throughout the webinar today, we're looking for a lot of input to help shape our response. To that end, we will be sharing a survey to get your views. That should come out shortly after the end of the webinar. And I'd ask that everybody take the time to complete the survey. It shouldn't take too long. We will share our response to the consultation for everybody that takes time to complete the survey. And finally, if anybody has any further questions or comments, please reach out to your usual Ayming contact or to me or one of the other two presenters from today. We'd be happy to help. And there we are. We've reached the end. I'll say thank you one last time, and I hope you found that useful. Good evening.